Chinese stocks taking a beating on economic pressures. The country's blue chip index closing down more than 2% today, which is the biggest single-day drop in 6 months. Now, our next guest has been warning that China's economy is in trouble due in part to the real estate collapse. And Dennis Unkovic is a partner at Meyer, Unkovic & Scott, and he advises U.S. companies doing business in China. Also out with a new book this week called The Fragility of China, Breaking Points of an Invincible Regime. Dennis, great to meet you and have you here. I know you and Kelly know each other well, but tell me, is this China thing going to get that much worse?
Yes. You like long answers, but the answer is yes. China has been in a declining position for at least 4 years. It wasn't just COVID. There were a whole bunch of things that came together. And in my opinion, the economy that they have is really going to continue to deteriorate for the foreseeable future because a third of the economy is based upon real estate, and real estate is essentially in the tank.
Can they thread this needle somehow? I mean, a lot of people thought when the U.S. started raising interest rates that our real estate market was going to go through something very different than it has. So is there a way that the hyper-planned Chinese Communist Party can figure out a way out of this?
Xi Jinping is a control freak, and so is the CCP. There's nothing they have done really in the last 2 years. What they did over the weekend is they decreased the bank rate that would be charged by 0.1% or 1/10 of 1%. That's essentially nothing. And I think that because this happened, the markets in the U.S. are the same as the markets in China. People see something and they don't like it and they react. And as you said a few minutes ago, their economy's down the worst. I mean, the stock market's down the worst as it's been in the last 6 to 8 months.